What's up everybody? What's going on? Boske's FX family. I hope you guys are all doing good and welcome back to Boske's FX YouTube channel, guys. And in today's video we are going to be talking about how to trade ICT concept and combine it with supply and demand strategy. So if you are looking forward to learn about those concepts, you're most welcome to join the family. Just don't forget to hit the subscribe bell and turn on the notification icon so that you will not miss out any new concept from this channel. So guys, what you have to understand, right? You can use any concept in the market as long it helps you to be a profitable trader at the end of the day. So I'm gonna share with you how I do combined ICT concept and supply and demand strategy to be a one concept which will help me to be a profitable trader in the market. So as you can see here, guys, if we are highlighting this law in ICT concept, we call it a sell side liquidity, right? And then the last high, we call it a buy side liquidity, right? We call it a buy side liquidity, something like this. So what you have to understand, when you are using ICT concept, you are going to be focusing on fair value gaps and breakup blocks, right? A lot of time. So as you can see in this scenario, guys, we did have this last low, right? And this last low was never being tested, and then the price came back and took it out, and now the price came back to that zone area, but the price have created what we call a imbalance, or what we call a fair value gap, right? So this is how you highlight your fair value gap in the market, right? You have to highlight the last low in your left side and the last high in your what, in your right side, something like this, meaning this is our last low right here, guys, and this is our last high, something like this right there. So if you use supply and demand only, guys, not combining, you are going to say this is your what, your supply zone area, and then the price give you a break of structure. Now the price went up, took out the what, the supply zone, creating a new high, meaning now we have a change of character. The next thing which we anticipate price to come back to the demand, and then they'll shift the market to go to the upside. But in this scenario, you can see that the price continued going to the downside. So you have to also pick at least 3 time frames which you are going to be focusing on. So the first time frame is going to be your bias time frame, which are going to look for your bias of what you'll be looking for in the market, right? So for me, I use my daily time frame, and as well, if you do not understand how to do a multiple analysis, go and watch our recently video, right? The last recently video, it will help you to understand how to refine as well. So as you can see here, this is my daily time frame, and that's where I can get my bias, right? So what you're going to do, right, if you see something like this, you have to understand that if we are using the market structure as well, the market structure, it can tell you itself that the price always respect what we call fair value gaps and breakup blocks. So when price is going to the downside, right, they create something like this. As you can see, guys, let's say the price is going to the downside. This is the actual market structure which we all know, right? So as you can see, we have our low, we have our high, right, and we have our new low right there, we have our new high, right? So whenever price give you a break of structure, something like this, a break of structure, the next thing which we anticipate price to come back to the what, to the supply zone area. So here is where we can find our supply zone area right here, guys. Let me just change it so that you can see nicely. So here is where we can look for our what, for our supply zone area, right? And you can see that the price can come and create a new lower high right there and continue going to the downside, meaning this will be a new what, a new supply zone area as well. This will be also a new supply zone area. And as you can see guys, the price is not coming back to this supply zone area, it's just rejecting, right? Sometimes that's where you can find the price giving you that impulsive move going to the what, to the upside, and then they can decide to go to the downside, something like this. But without that, the price will always turn at this momentum, meaning if we are using ICT concept, right, you now understand how to take trades from these highs while the price is going to the lows. So as you can see here, we have what we call a low. What you have to understand, this is our demand zone area, right? But supply overpowered demand. Now this zone will now become our breaker block level. Sorry about that, breaker block level, right? And then the price will shift the market going to the downside. Sometimes it can also come above this breaker block going to the what, to the fair value gap, right? And then shift the market going to the downside. So you have to understand that. So whenever you trade, right, you have to have what we call conditions of why are you going to take your trade, and as well you have to have what we call confirmations, right? So now the next thing which you do, right, is always you go in your 8-4 time frame. So in 8-4 time frame, you have to understand the price can create a lot of higher highs and a lot of lower lows, right? So let's say the price have given us a structure like this, right? In smaller time frame, they have given us a structure like this, right? If it's below or price come back to mitigate the what, the breaker block, you also have to understand price can come back to this zone and then shift the market going to the downside. So this is what we call our low, this is our high, right? So this low, we do not call it our low, right? Actually we want to see price taking out a high. That's when we can call this zone a low, right here. So this is a substructure right here. This is just a substructure in the what, in the middle of the market, right? In the middle of the market. So this zone will now become our inducement. So whenever you see a inducement, you have to understand you can find a breaker block or a fair value gap at the top right there, which will help you to understand now the price is creating a new what, a new lower high, which is your new external what, external high, something like that. So as you can see here, this zone was being created. As you can see, we did have our what, our high here, this was our last low, and then the price took out this zone area. But before taking out, they have created an opposite candlestick, meaning the price tried to reject, to push the market to go to the upside, and then they just rejected this breaker block, but they didn't go in deep. They just rejected when they just go in, right, and then rejected and shifted the market going to the downside. Now you can understand, okay, this was the last opposite candlestick which was being created before the price break this structure. So it will now become your what, your point of interest, or what we call an order block zone area. So once the price comes to an order block, you know that this will now become our inducement, and it was created under this zone, right, under the break or structure. So we do not consider it as our supply or demand level if the price is going to the upside. So now if you find out that you have to go in what, in 15 minutes time frame. So in 15 minutes time frame, you are going to be looking for your confirmation entry, right? So this is what you have to understand. You have to have your own confirmation entry patterns which you wait for. Especially for me guys, I look for breaker blocks more than I look for order blocks. So as you can see, let's say the price is going to the upside, right? And then the price will give you something like this and break the what? The demand. So this was our demand right there, right? And then let's say the price will reject something like this. What you have to understand, right? Basically, sometimes the price will not come back to this actual supply. They can come back to a breaker block, which is this low right there. Why this low? Because whenever price is coming to the demand, right, this will be our demand. So meaning this, whenever price reject to a demand, this means that they will pick orders already. But if the price fails to break the high and then comes back and being taken out like this means that the price can also put the orders at the same momentum where they were looking for buys. Now they'll be looking for sales at that momentum. So the price will give you a pullback and then the price will go away to the downside. So this is what we call a breaker block, which you can also find in ICT concept lessons, right? So as you can see here, guys, as you can see here, we do have a what? A rejection, meaning we do have a demand being created, and then the price came back, rejected, and then shifted the market going to the downside. As you can see, the price just came back and mitigated that zone A and shifted now. So now if price once come back to that zone A, you are now focusing on this what? On this supply, which is at the top right there. So this zone will now become our liquidity grab. So you can say this is our bias what? Bias liquidity grab right there. So now you'll be focusing on what? On this supply level right there. So if we come back to our what? To our right side, you can see that the price did come back to the supply now. So now you're going to be waiting for your confirmations, which you use to look for your entries, right? So for me, I look for change of character if the price comes back to the supply zone area. So for my change of character, you can see this was our last lower high, and then the price created a new high and then came back and took out this zone. So now this means that we do have a change of character at the bottom. As you can see, we do have a change of character here. We also have a break of structure right there. This was our break of structure right there, and you can see that we also have a swing high, we also have a swing low right there, meaning we did have a break of structure. So this was going to be as well our demand zone area, but it was being taken out because the price is coming from a what? From a supply zone area. So here the price fails to take out this high right there. As you can see, the price fails to take out this high, right? The price fails to take out this high right there, meaning we did have a supply zone A, which was at this momentum right there, and it held the orders and shifted the market going to the downside. So the price pushed the market going to the down, and you can see this was our last what? Our last demand zone area right there, guys. If we go back in H4 time frame, we now have something like this. Let me just rewind it. Okay, we now have something like this. As you can see, this was our demand level right there in H4 time frame. Now let's go back to our 15 minutes time frame, right? So if you come back to a 15 minutes time frame, this is where you'll be waiting for, because now say I have a change of character at the top, right? So what the price will do, they'll come and reject, right? They'll come and reject. So this happened on Monday, and I still remember I took this trade right there, a sell trade. Because why? Because the price rejected and went up, and it come back to taking out the what? The low, meaning now we have a liquidity sweep at the both side now. So this was my what? My breakout structure, because the price is continue going to the downside. You'll be looking for continuation pattern. So the next thing which I did, I highlighted my liquidity grab, right? So this was my buyer's liquidity grab. This was buy liquidity grab. buyer side liquidity grab, and this can also be your what you sell liquidity grab, something like this. And now this will now become your breaker block. So in ICT concept, you wait for this breaker block right there, and then you take your entry, and then the price will push away the market to the downside, right? And I'm gonna put a clip of the analysis which I had there. So as you can see, the price shifted market going away to the downside now, and now they have created a what, a supply level. So this was a rally base, right, and then drop, something like this, meaning this will now become our supply level right there, right? That's why the price just came back to mitigate that zone area right there, as you can see. So you can see that at this momentum we did have this mini supply, and it tried to push the market to go to the upside, but it fails. So this was going to be your breaker block. So this was going to be your first entry, meaning your breaker block, and this was going to be your what, your point of interest, which you can say it's my supply zone area. And then the price shifted the market going to the downside now, and we did have another breakout structure for continuation pattern, because the price will be going to the downside. So this will now become your supply zone area. You can see that the price even give you a correction, a nice correction to the supply. Now they shifted the market going to the downside, as you can see. So what you have to understand, guys, what you have to understand is that whenever price is going to the downside, now you are going to be trading from this high, right? Meaning you are going to be focusing on if you can find your what, your fair value gap or your imbalance or your breaker block level, and then you take your entry at this high. So ICT concept helps you to trade from these highs, right? It helps you to trade from these highs, not to wait for the price to come back to this what, supply zones areas, but it helps you to trade from these highs, and then you'll be a profitable trader. I hope you enjoyed this video and you have a blessed day. Please like and share and comment what you think about this video. Have a blessed day, guys. Thank you.